Hey everybody, it's CryptoBirb, Adrian speaking, and welcome to today's Friday webinar. It's been hot and couple of different difficult days for many people outside there, especially around Ukraine. My all the heart and all the prayers go actually straight to those people who suffered due to the war uh, right around my border, right around the border of Polish country as well. And I do hope you guys are recovering from it uh, soon. It's definitely not easy. It's definitely not easy to watch what's going on right to our brothers out there. And I wish this ends fast. And on today's session, I'll do my best, of course, to provide you with the market insights. We're going to have a look how the wars usually commit to the market performance, what can be done in order to protect your capital, protect yourself against sudden volatility declines. And we're just going to give it all a deeper case study. So if you guys are tuned all ready for the show, we are going there right in a second. Welcome, welcome, welcome. Please let me know how you're doing. Okay, there are people uh, just coming in to the show, so please let me know how you're doing, where you're writing from, if you're safe, and if you're feeling fair enough to commit to the show today. Because, like I said, the topic is definitely not easy. It's been a lot of painful, difficult days for many people out there, and uh, you know, it's very hard for many different reasons. And I just want to say that I do truly believe that you guys are staying safe. Yeah, let me know in the comments where you're writing from. How is the weather up like? How the weather is like up like today? Where you are base located? Uh, all the kind words. Thank you guys so much already. Hi everybody. Big blessings from Phoenix. Amazing. Uh, Phoenix, Arizona. It's beautiful to put. Yeah, of course, as always, before we go, make sure you actually are always subscribed to our channel because each and every single day we have something new coming out in terms of the market, in terms of how the market reading, in terms of the technical analysis, and not only. So, if you are new to this channel, make sure you hit the subscribe button, smash the likes, and leave some kind comments as well in the comment section. I'll do my best to go after the show through the comments and try to answer some of the questions. Um, Dubai, there's Ontario, there is Lima, Ohio. Snowy and cold here. More snow in Ontario. Okay. It seems there's a lot of snow. In Poland, actually, it's not been too snowy overly in the past couple of days. Chorzów, Wiadomix. Uh, Picking you up in Michigan, USA. Nairobi, with love. Love you back. Hamida Mwangi. Okay. This is very good to kick it off. I'll do my best, like I said, to answer some of the questions. So do not fear to actually put them in the questions if you have, and the questions in the comment section if you have them. And well, what can I say? Um, to perhaps start off by saying something, something potentially more, um, I should say, on the positive note. You know, uh, well, there's been a new addition to the contributors section to the Burb Nest, and hopefully I'm able to play the chart. For some reason, it's not really wanting to play well. Okay, not sure what the reason is. Okay, but more importantly, we're very happy. Myself and the team are very happy to officially welcome a brand new contributor, technical analysis contributor the team, to the team of the Burb Nest. And we are talking about Donchin Labs. So a very beautiful guy in terms of how much value and insights he's provided within his specific testing period, if you will, because we always take care about the values and high standards that we do as the educational community platform that we are ever since 2017. And On-Chain Labs has successfully managed to go through and become a contributor at the Burbness. So huge welcome, kind words of welcoming. I think this is an amazing achievement. So this is definitely a huge challenge ahead for him, but I'm pretty sure that he's going to commit wholeheartedly in order to, well, eventually become the fully approved the Burp Nest team member. And of course, there is a lot of going on, like I said, between our, like right around our eastern border in Ukraine. There's been a lot of tensions, which definitely brought a lot of disruptions to the financial markets uh, all the way out there. And I'm going to give my best, actually try my best to explain to you some of the insights, how the markets react to it. Okay. And I do believe that it's very important to start off by, kind of like reminding something that is fundamental, right? Something that is foundational in terms of analyzing the markets from the technical perspective, right? From the perspective of the price movements, trends. And it is naturally understanding the technical analysis definition. Okay, and we are talking about the technical analysis being a kind of a study of price and market behavior. Okay, with the help and application of charts, certain technical tools, indicators, in order, okay, to analyze and forecast potential future price trends. So, long story short, this is a form of a price study. This is a form of a market study in terms of price charts with the application of certain tools, indicators. Okay, we try to measure certain movements, see how the markets reacted to certain trends, factors, coming even from the outside of the markets in the past, and try to come up with certain potential paths and forecasts for how markets can react to these in future. Is this always 100% proved or 100%, I should say, reliable? Not really, right? And we should always remember what technical analysis is not. Okay, it is not a 100% guarantee win ever. It is not resistant to market manipulations. It is not a crystal ball to predict the future. It is not a set of squiggle lines either, right? So when we are discussing the technical analysis and the ways that the markets are moving, we are discussing mostly what's actually happening inside the market, right? The technicality of the market means that we analyze what is happening inside of the market, inside as in terms of the connections or the behavior spotted between two different traders making a trade, right? And a seller and a buyer. And technical analysis lets you, understand those market behaviors through those individuals, right? Through the market participants. While it is quite often, impacted by the external factors, by fundamental factors, right? So anything TA regards inside of the market, and anything FA, the fundamental analysis, focuses outside of the market, how the market actually is shaped based on external factors such as macroeconomics, right? So, such as some geopolitical changes and shocks too, right? So I think it is very important to understand again that even the best looking chart can at any time, at any second, be disrupted by some external factors. Even the best looking chart, the most bullish chart, can be easily reversed or reverted with a dose of some bearish or bullish news, right? The Bitcoin peaked in early November with the perfect same day, hour, and minute of what the Evergrande news actually popped in, right? This was the same day for the peak in the stock markets, in the equities, in many, many assets, including cryptocurrencies, right? So, understanding the nature of the technicality in the markets, is that this is dynamic. This is dynamic. This is subject to change, and even the best looking chart is going to get, completely wrecked and damaged for its picture, provided that there is some external factor impacting that, right? So, such as natural catastrophes, such as wars, such as, I don't know, asteroids crashes into Earth, right? Such as some other tensions, etc., right? So TA stands no opponent to it, right? We're talking about some macro changes, some fundamental changes that disrupt and make the technical analysis somehow subordinate, to the higher chances. Um, and I'll do my best to actually go through a couple of a couple of points perhaps to analyze and see and tell you how the market has behaved, in the past. Okay, so let's have a quick look. This is a website which is called I mean this is taken from the from LPL research market movers, right? And this is this chart which has been flying all around the Twitter for quite some time already. Many people quoted and cited it in many different places. And this basically, this is a table which tells you different brings a comparison of many different market shock events, such as wars, invasions, like some crises, financial crises, some overall market shocks. Okay, coming with their dates, with 1 day changes, and with the total drawdowns. Okay, and it's going back to as early as 1941 at the bottom of the table, right? And I do believe it's very important that if you have a look, right? I'm not sure actually if the drawing tool is going to be visible, right? So I'll just go and try to monitor if it actually shows any changes to it. But quite importantly, uh, we're talking about the like set of different shock events just coming from the south bottom of the table upwards. Pearl Harbor attack, right? In 41, 1 day change came with minus 3.8%, okay, to the S&P 500 index average, and the total drawdown that would come with the Pearl Harbor attack would be nearly 20% downwards, right? Nearly 20% decrease. Then higher one position above, is North Korea South Korea conflict. Okay, 1950, 5.4% down, 12%, almost 13% down in the total drawdown to the right. Okay. Of course, we have a couple of these, such as Hungarian uprising, Suez crisis, Cuban missile crisis, Kennedy assassination, 1963, minus 2.8%, minus 2.8% on the 1 day in total drawdown, right? So we have sets of assassinations, of wars, of crises, right? Um, and then you can tell that more often than not, it is quite negative on the impact, right? It is quite negative. Then if we go, Reagan shooting, 1981, somewhere in the middle of the table, going upwards, right? 30th March, 1981, minus 0.3% both on the 1 day in total drawdowns. So you can tell that there is a certain differentiation, certain difference between the impacts that, those happenings, those market shocks, have upon the markets. Then you have U.S. terrorist attack, in 2001, 9/11, of course, minus 5% nearly 1 day and minus 11% on the total drawdown. Okay, you have London subway bombing, 2005, which is interestingly, for some reason, 0.9% in the positive in the plus and 0% total drawdown. Okay, so there was like some market shock which got pretty much priced in like right after and sold off. Okay, bombing in Syria 2017, minus 1% on the total drawdown, minus 4%, on the Saudi Aramco drone strike. Okay, in 2019, if you remember. The news flying all around in the headlines, minus 4% in the total drawdown. So you can tell that depending on the actual size, let's say go back to the table, go back to the bottom of the table, there's Pearl Harbor attack, right, which gave you, like I said, 3.8% to the downside of correction and 19% on nearly 20%. Okay, it almost qualified as a bear market just based solely off this sort of like news trigger, if you will, right? And it took per this far right score 307 days to recover for this market in the calendar days. Okay, so we can tell there's two different categories. The market assigns different sort of like importance and different, and it differently discounts this type of a news. But this type of a market news, market shocks, okay, of price shocks, the way you see it in the charts more often than not, is something that you could refer to, um, as something that is temporary, transitory. Okay, more often than not, these price shocks tend to get discounted by the market, and then they tend to go, back to the place where they came from. Okay, of course, it takes some at times some longer period actually to catch up, but more often than not, the market actually reverts back to the pre-shock levels. Okay, then moving on, there is of course another chart taken from smedleyfinancial.com, about the comparison of how wars actually committed to the overall Dow Jones Industrials average, Dow Jones Industrials, and well, with the set of certain historical dates, such as Germany invading Poland, 1st of September 1939. There's later on, like, I wish I could actually get you the arrows, that the drawing tools. For some reason it's not really working right now, so I have to operate just with the language. So I trust you understand what I'm saying. But starting off of the left bottom corner of the chart, right, there are two curves. There's this bluish, dark bluish curve, and this violet curve, or pink, if you will. I don't know, I'm a man, I don't I cannot tell different colors. But you have two curves, right? And the upper curve, which is basically the Dow Jones Industrials, right, and the bottom curve, which stands the pink violet curve, which stands for the CPI, Consumer Price Index, or simply the measure of inflation, right? So we can tell that any war period, be it World War the First, 1914, or World War the Second, the Vietnam Wars, 1964, then towards 80s, early 80s. Then terrorist attack, 9/11, of course, on the far right upper corner. All of these war-ish periods are basically marked in these shady, gray shades, right? I hope you can see that. By the way, please let me know if you see if you can see these charts well. Yeah. Okay. Please let me know. Just like I said, we need to communicate, of course, that there's that you guys are staying and catching up somehow and following what I'm saying. Of course, it's not easy to talk about those things, but I do really want to hear from you guys that you can hear me and see me fine. Okay. Quick check. And in the meantime, guys, this is a kind of reminder that if you're not subscribed to this channel, make sure actually leave some thumbs up as well if you appreciate the content and the time, and leave some questions so that I do my best later on to give you a chance to give your answers. Okay. Then back to the merit. Back to the merit. I think there's a certain delay, but I hope you can still catch it up. Back to the merit, bottom left corner, right? Forward first. You can tell that there was quite a choppy period, right, on the industrial scale, on the industrial curve. The darkish bluish curve, is actually showing you a certain moment of choppy, volatile, sideways period, right? And only after the war actually ends, you get this proper Dow Jones Industrials push, right? And coming off the first lower left part of the chart, you can get this Dow up movement of 504%. Okay, from the moment measured from the bottom, of the war, if you will, Dow Jones curve, and coming off to the very peak. Right, there was of course a proper bear market, Great Depression, um, Great Depression 1929, 1933 or 32 with the perfect bottom, stocks falling, 90%, uh, bad days. Then recovery and another period of war, right? Another period of sideways. 1936 is actually where this sideways movement started, occurring, and with the 1939, when the Germany invades Poland, you would have this proper also negative reaction, which later was followed by upsloping movements, right? So these wars so far, World War the First and World War the Second, those seem to actually just bring a lot of uncertainty, a lot of chop, a lot of downwards aggression, which is followed by significant upwards pushes, right? Because after you can going into the middle of a chart, following the Dow Jones Industrials, the darkish curve, you can tell that Dow was up 523%. Okay, measured from the another war periods, let's say, if you will, towards the next peaks of Dow Jones Industrials, right? Then you would have Vietnam Wars, right, following Vietnam tensions, following certain number of years. Starting off, Tonkin Gulf Resolution, Saigon Fells, 1975. Okay, another batch of years where the market was moving in a choppy sideways, right? Choppy sideways, a lot of downwards aggression, which was later sort of like brought to the same levels from before the crashes. And that was up 9,000, actually 47%, right? So 1400s, uh, 1,447% to be specific, measured from the pre rally levels to the factual peak of 2001, right? Then you would have another sideways period coming with the terrorists, right, of 9/11, etc. So you can tell based on this historical chart, ever reaching the early 20th century, that the market tends to react aggressively in the short-term period, right, to those military, tensions, wars, uh, and after some period of uncertainty, downwards declines, which are fast forward rebouts, you can tell that there is an overall upwards pressure continuing, right? Perhaps if this history, is of any predictive power, is of any predictive force, then perhaps it aligns somehow with what we may at least expect in 2022. It doesn't seem that 2022, on the contrary to 2020, is going to be as powerful in terms of the market performance, but rather potentially, oscillating somewhere within the range bound movement, right? So heavy declines, heavy buybacks, heavy declines, heavy buybacks. Perhaps it may maintain this trajectory for quite some time. Of course, like I said, anything that we're discussing here is, of course, by no means, financial advice. Everybody is responsible for your money. The conclusion, though, may be a little bit more apparent if you study those charts with the historical records, just like I said, right? Then if we follow it, what is the actual reaction to this conflict that we have right around the border of Poland? This is a picture I found somewhere on the internet, but it actually reflects what's going on today in Poland, right? Because of invasion, because of this overall tensions that you have out there, mm, people tend to FOMO um, to many different, I should say, irrational levels, right? The levels of irrationality actually just go through the roof. You had similar stories when the COVID pandemic actually started off in March 2020, right? Now that you're seeing those people, kind of like running around with the backs and with the um, how we call that, with the fillers, with the packages, bottles, um, to fill in, it with the gasoline, with the benzene, you know. Then in 2020, in March, people were running around and buying all the, uh, not even the groceries. They were buying the toilet papers, if you remember that. So there is a lot of irrationality and a lot of this, herd instincts actually just revealing, going through the roof, just like I said. And you would see more often than not in Poland this picture that many people actually just get to the gas stations in order to get them properly filled in advance, just in case, with the gasoline, right? It doesn't really have much to do with any logic, I should say, but it does definitely result in leverage and um, higher gas prices, the gasoline prices. So that there's been just overnight, I think about 15-20%, if not more, that are increase over the gas prices on the gas stations. You would also see that before we go to the market overview. You would see that as well coming in the overall pumps seen on the oil markets, right? Because anytime that there is a proper um, invasion, or anything regarding Russia, there is an overall fear of oil, right? Of oil shortage, supply shortage, which is usually why oil just goes through the roof at those times. So I want to just give you guys a proper look, proper check, um, through the markets. Okay, let's go through the market overview. I do really hope, I'd really hope that it's somehow going to. Mm-hmm. Okay, so for some reason, apparently Google Chrome is blocking my drawing tools. Okay, so I'll do my best somehow to overcome that. Hmm. Well, we'll have to follow it in such a way because apparently there's not much chances. Okay, so starting off, just like I said, with the industrials, I hope you can see the chart. The industrials are actually here. Provided you can see me pointing that. Industrials, though just industrials, there's 732 points, or almost 33 points upwards. Or 2.2% approximately since the open, right? So we are actually watching an actual follow through from the lows of 32 thousands, okay, 32 thousands. And I do believe that this is, well, quite a significant pushback or pullback, if you will. That is also seen even more aggressively on the composites, right? Although the total size of the upside pullback on the composites is somewhat bigger. You can have that seen here basically in the chart. This is on the left side of the chart. You have composite Nasdaq index, right, which shows you the peak to the bottom, the total drawdown for approximately 22%, 22.28% approximately, peak to the bottom, peak of November, back to the February bottom, which happened basically, well, yesterday, if you will, in the pre-market. And right now, Nasdaq Composite is trading about 8.57%, about more than 8.5% upwards since bottoming out. Okay, the bottoming out is about 12,600 points, if you will, with a strong piercing line or a piercing candle, which actually shows you that the market opened way lower. The market gapped down at the open, and there was a buyback into the open. And a lot of buying pressure appeared right after the market opened. Uh, Interestingly, right, because that was the actual time that there was a proper war going on. So it's a little bit interesting and intriguing. On the right hand, you have you would look at the S&P 500 large cap index. So the large caps, right? The large caps are actually recorded with nearly, well, somewhere between 14 and 15% here on the chart is minus 14.58%, 14.58, 14.6, approximately rounded it up for the overall decline drawdown, peak to the bottom. Okay, and well, the upside pullback, the recovery so far, as opposed to 8.45%, on the Nasdaq Composites, it is set at 6 point almost 3%, 6.3%, probably to be more a little bit more exact. Measured from the lows, right? Measured from the lows of low of 4100s. Okay, low 4100s, now at high 4300s. So this is definitely quite a strong, significant upside pullback recovery with significant setups for upside reversals. And the fact that we are seeing and looking at in both instances, in the Nasdaq, which is a little bit more aggressive, and the large caps, okay, the fact that you're looking at those setups actually getting a follow through to the upside, right? It's not. It shows that this is an overall market intention, right? This is apparently this is not really just a temporary sort of like a moment. That this is not necessarily like a coincidence, or should I say incident, right? It is more of a follow through on the market decision, because the market confirms with not only the breakout and the pullback and the piercing line, piercing candle, um, piercing formation, candlestick formation, or the market gap down at the open, right? Gap down, the gap was filled, and actually most of the prior downside candle body, real candle body, was covered or invaded, penetrated with this piercing line candle. So far, we have in both cases, in both instances, quite a strong penetration of the bullish candles, bullish inflows into the overall bearishness of the past 3-4 months from the equity markets, right? This is the way we're looking at it. Then going down the road, perhaps real quick, before we jump into the crypto, you can tell also that DAX, actually the German DAX composite, is heading the lows, and it's really bleeding, right? The German DAX composites, per the records of the stockcharts.com, you can tell that the market is down 0.4%. Almost 4%, 3.96%, or 580 points almost down since the very open, also having the gap down. Okay, so strong gap down, some strong breakaway has just occurred, and the market is stunking out there. If we have a look, I think, through what's going on, not even the discretionary, not even this, look at this strong recovery in the staples, seen at the ETF, 2.98%, almost 3% upwards since the open. Strong open with the gap up as well. Strong recovery, testing 50-day average. Financials are strongly upwards, also with the gap up. Energy is also gapping up a little bit, and resisting to go through or to tank below its short-term moving average, seen as the green curve here in the chart. Right. I do hope you're following what I'm saying, guys, so far. The technology, which is of course nicely correlated with the composites, Nasdaq composites. You can watch that also as the performance of the XLK technology ETF, 1.27%, for the approximate value of 154 points in the chart. For the ZDF, I do believe that it's also worth mentioning real quick, that most of the bonds, the 30-year 2 bonds prices actually were, slightly down today, down to 153.41. While there is, of course, a little bit of surprise in terms of the yields, okay, which are approximately a little bit down as well. Right now at approximate level of 2.28, 2.3, which has been a strong resistance ever since hitting these values quite some time ago. If we have a look at some short-term scope of 10-year treasury notes, there is treasury notes actually, just round down a bit with 1.51% change, the daily change, okay, versus the TNX, showing the decent bond, the decent correlation, as the ETF is showing at 1.68%. I do think, that if you actually just have a little bit of a zoom out, perhaps you're going to notice that most of the bonds are in the red. Okay, most of the bonds and yields are in the red as of today. And more importantly, ETFs for gold, right, are showing quite a significant spike, a reversal spike, a strong reversal spike that could be read as some form of an outside bar or a bearish engulfing, right? This is quite a powerful, I think, chart in here. Uh, the gold in the end of the day contract are actually, if we open up even, uh, if we even open up, mm, let me have a look. Mm, 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 mm. Right, this is a gold chart, so let's actually just give it a closer look. Yeah, you can tell that, here on the far right of the chart there's this weekly, this is this daily candle, sorry, and it's actually just, right there at around 1926, definitely trading significantly higher. But yesterday I actually made a tweet, about gold having this significant breakout, mainly as a result of a safe to rally, right? Rally to safety. Many people tend to withdraw the risk on positions and actually choose to de-risk their overall exposure, de-risk their capital, and put this money into ever-lasting safe haven plays that the gold has always been. Right, so not much of surprise, significant strength for the breakout, although there could be some more follow through to the upside, if gold is supposed to continue the move to the upside, in the short term perspective. Mm, and very quick look in terms of, the commodities. Very quick look in terms of the commodities. This is a Bloomberg Composite Index (PCOM), which basically tells you how the commodity sector as a whole just presents itself on a screen, and you can tell that the market has been moving, very very fast, upwards, right, in the upwards direction ever since getting, the lows of the March COVID 2020, right? So a very definite strong movement on the commodities continues, mostly committed from the energy sector. Uh, Demand, for oil, for gas, just like I said, is coming due to the fears of the shortage. And this is quite a typical behavior, as the history learns. And on top of that, this commodity sector is strongly impacted by what's happening not only in the energy sector but also in the overall precious metals, right? So gold and silver are also what drives the commodities go higher. So that the recent peak of uh, of the movement was actually at around 119 points, which is basically unseen ever since, I think, 2014, if I'm not mistaken, right? So, definitely just even behind the left side of the chart, 2014 November, right? It was actually the last time we saw these high values on the commodities index. So, very strong push on the commodities. And uh, and moving on, we also have to understand how these movements can, well, can impact what's happening on the Bitcoin market, on the crypto, right? Because you may see me start watching or showing, rather than watching, because I've kept watching this anyway, but showing it to you, the analysis coming from the outside of the crypto market. And there are certain reasons for it, and one of the reasons, simply put, is that whenever the things are extremely uncertain, the Bitcoin tends to follow the other markets, right? It's not a decoupled market. Instead, it follows very closely what's happening in the equities, right? And I'm going to give it dedicate a couple of more minutes, as we're heading into the end of a show later on. But for now, uh, there is there's Violetta, I think, saying hello from Ukraine. So let us know, please, kindly, how you guys are doing out there, whether you're staying safe or not. And all the best love to you guys out there, to our eastern neighbors in Poland. Mm, I do believe mm, that it's fair to move slightly to the analysis of Bitcoin, right? Like I said, for some reason, my main drawing tool is not really working, so I'll have to somehow figure it out uh, some other way. Okay, but hopefully you see this Bitcoin chart, right? This is long-term Bitcoin chart, a weekly chart, coming with the overall well with the overall addition of the 50-week average, right? The 50-week moving average. The 50-week average actually tells you the story of the past 50 weeks of the price action, almost a year. The 52-week, um, set of weekly candlesticks actually is what commits to 1 year of the price action here. Because the market is 24/7, it's approximate. It's one of the most frequently used tools to analyze the 50-week moving average. Okay, and so that the black curve seen here, is basically the 50-week moving average. Let me actually just have a look if I can have this arrow somehow improved, right? Like I said, I need to somehow figure out, this way. Okay, so we're talking about this being the 50-week moving average. On top of that, we are here moving at a weekly candle. We've seen, after seeing somewhat of a significant, downside week, right? The downside, the lower candle shadow, if you will, as opposed to the small and narrow candle body, the real candle body, right? As we go down and try to somehow zoom it in, you can tell that this tiny, candlestick body, forms some sort of a hammer candle should we close this week the way that it does look right now. Okay, so this could be potentially promising for further upside recovery, especially if it is accompanied by stronger recovery from the equities, right? So the markets, uh, the Bitcoin has been strongly correlated with the equities, which is the exact reason why I dedicated so much time to analyzing the stocks in the first chapters of this show. And here I think it's very important to understand that the moving averages, especially the long-term averages, the 50-week average, just shows you the fair price of Bitcoin based on the historical 50 sessions of the past 50 weeks, right? And you can tell that the fair point in the chart is given at 47,000, approximately $47,000. Given this as a resistance, given this as a potential line in the sand that Bitcoin could potentially revert back to, right? And because the markets tend to oscillate between or around their averages, it is more often than not a case and occurrence that when we see set and moving average, right, the market tends to oscillate around those averages, right? Around those averages, committing to building this average naturally. And the result is that this moving average, tends to work as a form of a support or resistance because, well, technical analysis is mostly a self-fulfilling prophecy, right? Self-fulfilling prophecy that people tend to look at the charts, they tend to use similar set of tools, similar set of indicators, and they tend to have a look at different charts with the same tools, which makes them have and come to the similar conclusions, right? Which makes them act similarly. And because many people see set and bullish pattern, because they had read that this is a bullish pattern in the text somewhere, they tend to believe it's going to upward, it's going to break out to the upside. And eventually, if there are enough people, actually believing and claiming the same stance, then the chances are the market is actually in fact going to break out to the upside, right? So it is a form of a self-fulfilling prophecy, and this, oscillations around the average, just like I explained here in the top, is is the reason for me to believe that eventually Bitcoin is supposed to find its way somewhere into the higher $40,000. I don't know when it's going to happen. Perhaps it's going to happen tomorrow, in the next 5 days. I don't know, right? I have no idea about the timing. It's very important and it's very difficult in general to predict and forecast the price ahead, a day ahead, not to say 5 days or 100 days or a year, right? It's very difficult because there are so many variables. 4 days ago, nobody would even just say or tell you anything about the proper war, going between or tensions going between whatever tensions going between Russia and Ukraine. And here we're instead fighting for better tomorrow somehow, right? And I do believe that because the market is moving somewhat of a sideways for the past year, it is more fair, I should say, to expect that the market is not really ready just to overshoot it and go immediately to 100,000 just yet. Okay, instead, what could be expected is for the market to actually just dance slightly around the balance of the 50-week average, potentially even going somewhere higher if there's enough of bullish, I should say, factors. Perhaps mm, there have been some voices going on, that because of these war tensions, Ukraine, Russia, the chances for increasing the rates, right, and decreasing the inflation actually have diminished. As in, these military escalation actually decreases the chances that the Fed is going to raise the hike the rates, right? Is raise the interest rates, and this could potentially prolong the inflationary period if that is the actual case, which could lead to further Bitcoin's price appreciation along with the stocks, right? So it does make sense, to expect Bitcoin eventually becomes somewhere, to find you trading, somewhere around the area of the 50-week moving average, somewhere around $47,000, perhaps tiny bit higher, perhaps 50,000. Makes definitely a perfect sense to be retested, provided that we close this session as a higher low as opposed to the lows at $33,000, right? That these lows are not really violated or broken per se, and that this candle close happens, on Sunday with a form of some bullish, potential reversal candle, just like you see on this bullish, hammer or something like that. And of course, we could go, it's a little bit harder because I'm lacking those drawing tools that I usually use. But the shorter term or medium term price action analysis actually shows you that the market is right now trying to resist, or actually the market is resisting to break through the main local resistance at around $40,000. And it makes a perfect sense that if the $41,000 is somewhat reclaimed, there are chances for the market to continue upwards towards the prior resistance area at around $45,000, and potentially this is yet another attempt, to establish a proper breakout and potentially put it higher. But this is an assumption, and this is an assumption based of some bullish implications, such as the war ends, the um, the rate hikes, are either delayed or canceled. This could potentially trigger another rally for Bitcoin, another institutional demand flowing in, another retail set, coming into the market. Otherwise, if none of that happens, if we see some, deeper war escalation, if we see some more countries engaged, overall Poland is newly located to Ukraine, just around the corner. So, the more it turns dangerous and aggressive towards the entire planet for these escalated conflicts, you could expect more downwards pressures as well, right? Aside from the commodities tend to go up, during the difficulty times, mainly because there is demand for it, right? Let's say to equip the militaries and the armies, you need to use the commodities, you need to use the metals, you need to use the industrial metals, right? In order to equip it with the with the weapons or whatever. So more often than not, the commodities tend to grow in price and value, because of the supply shortage during the worst times, right? As opposed to the stocks, as opposed to the risk on assets, which Bitcoin is one of them, in my opinion, as of now, right? So we are moving in this form of a sideways movement all over again. And this form of a sideways movement is basically giving you a clean picture, right? The market is running short right now here. There is a running flat picture as of now with an overshoot, peak somewhere over here. But potentially, Of course, it is as long as it trades between the extremes of $33,000 and $45,000, it is naturally fair to expect the market continuing oscillating in those terms, in those boundaries, right? Without further implications. But finally, when you see a proper upwards breakout with a retest which holds, the breakout and retest which both hold, potentially leads towards further 50,000s and above. Otherwise, like I said, it is a very uncertain time and and the actual Nasdaq, tanking below or over 22% is actually potentially, if there is a close around these levels, around like negative levels, 22%. If there's another session to the downside, right, before the market close, the market officially enters a bear market per se, per the composites. So this could potentially, just prolong the Bitcoin's cluelessness and the bearishness. So far it's a little bit resisting here to pass through, to give it a clear green light to go past $40,000. The moment it does, I think we need to carefully, breakout retest on the lower time frames, and actually we have a chance to Bitcoin to revisit 45,000 as long as the stocks follow the same direction, because they are who detect, what dictates the overall market directions for Bitcoin as of now. Right, this is a clean overlay of the upper curve, which basically stands for the upper curve stands for the total market cap excluding Bitcoin, and the bottom one, the orange, is for Bitcoin alone, right? So you can tell the altcoins are a little bit underperforming. Bitcoin has just seen a somewhat of a higher low. Altcoins are actually just at the previous lows on average, right? This is a market cap, so showing you the amount of money being put in altcoins. It is not even 1 trillion per se, right? It is $983 billion as of now. So altcoins are a little bit backed off. Bitcoin is supposed to show a little bit more strength, and I'm not really surprised because altcoins tend to get like a second importance, second significance, right? And it's very rare for altcoins to actually ever lead Bitcoin. It's rather Bitcoin that leads altcoins. And finally, I promised to talk about a little bit about the Bitcoin correlation to the equities, right? And my good friend Ki Young Ju, if I pronounce that well, the CEO of CryptoQuant.com, wrote the Bitcoin and US stocks are highly correlated lately. It hits the all-time high today, which is basically as of 2 days ago. Good news, Bitcoin is getting adopted by traditional institutions. Its ownership is changing by new players who trade stocks. Bad news, Bitcoin is not a safe haven asset for now. And this is the actual result, right? If we check the chart, then the person correlation S&P 500 with the linear regression is hitting somewhere, over 0.54, nearing 0.55 as of 22nd. Okay, as of 22nd of February. And what does that mean? The strengthening correlation means that Bitcoin is more and more dependent on what the equities do, on what the S&P 500 does, right? So this is the reason why, I've recently started, because the market started being more and more correlated. This is the reason why I've decided to start sharing more of the legacy insights and legacy inputs, because apparently at this time of the year, Bitcoin tends to follow mostly and closely the direction of S&P 500, and quite a negative correlation to the gold, right? The gold goes up, Bitcoin goes down. The gold goes down, Bitcoin goes up. So there is this opposite direction formed, and S&P 500 to Bitcoin correlation at the person 60-day correlation of 0.5455 approximately is even larger. It hits an all-time high. The market has never been more strongly correlated. Bitcoin has never been more strongly correlated to S&P 500. So it means, again, that if we want to see what Bitcoin potentially may do, we want to go back to see and watch what the equities can do, right? The strength in the equities can actually lead to strength in Bitcoin. The weakness in the equities may actually cause Bitcoin to deteriorate as well. So, let's say Odessa, where I'm from, is just starting to get attacked. Jesus Christ, this is so bad to hear it. Mm. All the love and all the prayers are going to you guys out there. Stay strong. All my prayers go out to you guys. Um, yeah, it's very hard. Of course, I'll take one or two questions perhaps to close off the session before I need to wrap the show. So, one two questions, very quick, real quick. Feel free to drop them in the chat. And while you're doing it, this is a kind reminder, guys, uh, that if you haven't subscribed just to this channel just yet, if you are new, make sure you actually hit a thumbs up as well, in order to stay notified. Right, put the notifications bells as well. We get to release the content, the video analysis every single day out there for you. So make sure actually stay tuned, because perhaps it comes with some value to you and to your finances. Uh, okay, okay. There's a lot of chat going on, of course. Just waiting for this one question that hasn't been answered just yet. Okay, so let's just answer this one, short and bounce. So like I said, real quick, we were looking at the short term bounce with which happened with the piercing lines, in the equities, Nasdaq Composites, and stocks, as in the large caps, S&P 500, SPX, and this is what transits, just like I said, to Bitcoin, following the similar reversal pattern as well. So as long as the stocks continue the upwards, recovery, it does seem to make a lot of sense to expect Bitcoin, to follow similar path, right? So stocks continuing higher with a follow through to the upside and no further rejection may mean Bitcoin recovering past $40,000. Otherwise, if there is an escalation, if there are some more disruptions, there are some more problematic situations, expanding over there. This may add more downwards pressures and another set of risk-off environment situations, okay, which can potentially drag the money out of risky assets, out of equities, out of cryptos, into gold, into metals, into oil, with just this type of a market rotation. Okay, guys, I do appreciate all your love. Make sure we actually stay tuned and stay notified, all of us, for what's going on out there right around the border. Russia-Ukraine tensions are not easy to handle. All the best love, guys. To you, stay strong, stay blessed. God bless you all, and yeah, hope you enjoyed that. Hope you enjoyed the show. Hope the show has been somewhat useful to you guys out there. Perhaps this way I'll just somehow help outside what I'm doing off the charts as well. So what can I say? This is all for today. I've got prepared for you guys. It's been Adrian, CryptoBirb, speaking for today's Friday webinar. Make sure you stay tuned for the next shows and stay calm, stay safe, and stay blessed. God bless you all. Cheers and bye-bye.